learn with joy.
Hi, hello champions. Good morning. In the last class, we had the introduction to the material costing and we have discussed all the stock levels and we started doing questions based on the stock levels, which is very important from the exam point of view. In the today's video, we are going to complete remaining questions based on the stock levels. If the time supports, we are going to complete valuation of the material and stock ratios. Let us start discussing without wasting time the questions based on the stock levels. I am doing the practical questions. We already done with the illustrations which is given based on the stock levels. Now I am starting with the practical questions. I am going by the concept by concept, not the question number wise. Let us complete the questions based on the stock levels. Look at the practical questions. Question number 1. Anil and company buys its annual requirement of 36,000 units in 6 installments. So please understand the annual requirement is 36,000, that is A, in 6 installments. So that means number of orders is 6. So how much they are going to order means order quantity equal to 36,000 divided by 6, which equals to 6,000 units per order. 6,000 units per order. Next, each unit cost rupees 1. The purchase price is rupees 1 and the ordering cost is 25. What is this 25? Oh. The inventory carrying cost is estimated at 20% of unit value. This 20% should be, first of all, the 20% helps to calculate carrying cost. That should be applied on rupees 1. Rupees 1 into 20%, which equals to 0.20. 0.20 per unit per annum. Per unit per annum. Find the total annual cost of the existing inventory policy. What is the existing inventory policy? Placing the order of the 6,000 units. Existing inventory policy is placing the order of the 6,000 units. Now, next. And then they're asking how much money can be saved by EOQ. So there are two requirements in the question. They are asking to calculate total annual cost at the existing policy of 6,000 units. That is the first requirement. Second requirement is asking to calculate how much cost saved by ordering the EOQ. We already discussed that EOQ is the best quantity to place the order because it will minimize the cost. Now what we are going to do, we are placing the order of 6,000 units. So in this question, reorder quantity according to the first scenario is 6,000 units. In the second scenario, we are taking the EOQ. For that first we need to calculate EOQ. Using that quantity again we will calculate the total cost. The total cost at EOQ will definitely less than compared to ROQ of 6,000 units. How much is less? That nothing but how much the cost saved. They are asking in the form of how much is the cost saved. So let us answer both. First we'll take the first scenario, 6,000 units. When you take the 6,000 units, see, and one more thing, when it comes to total cost, it is purchase cost plus ordering cost plus carrying cost. When it comes to solution given in the study material, they are not taking the purchase cost. They taken only ordering cost and carrying cost. The reason behind that is purchase cost anyhow 36,000 into 1, which equals to 36,000. It is same in both the cases. In ROQ case as well as in EOQ case, in both the cases it will be 36,000. It is not going to have any impact on the savings of the cost. For that reason, they are not taking 36,000. When you are presenting the solution in the examination, even if you take 36,000, that is not wrong. You can take the 36,000. They clearly mention the note here. Look at here. Note. As the units purchase cost of 1 rupee does not change in both the computations in the sense ROQ, EOQ. The same has not been considered to arrive at the total cost of inventory for the purpose of savings. For the calculation of savings, it is not going to have any impact. so that they are not considering. Even if you consider, that is not wrong. You can do that. Clear now. So that means we are going to consider only ordering cost and carrying cost according to Institute Study Material solution. How to calculate ordering cost? Number of orders into ordering cost per order, that is A divided by OQ into O. How to calculate carrying cost? Average stock into carrying cost per unit per annum, that is half of OQ into C. Let us do first one, ordering cost. How many orders? 6 orders. Or else you can write the formula first. A divided by OQ into O, that is 36,000 divided by 6. Ordering quantity, sorry, 6,000. 36,000 divided by 6,000 into 25. You will be getting 150. When it comes to carrying cost, half of OQ into C, that is half of 6,000 into C, 0.20. That is 3,000 into 0.20, 600. So if you make a total 750. Clear? Next. So this is the cost when the order is 6,000 units. To answer the savings in cost, first we need to calculate EOQ. EOQ calculated, that is 3,000 units. So now we are going to calculate using 3,000 units ordering cost and carrying cost. Ordering cost is A divided by OQ, that is 36,000 divided by 3,000 into O. What is the ordering cost per order? 6 rupees, huh? Sorry, 25. Ordering cost per order is 25. 12 into 25, 300 rupees. Carrying cost half of 3,000 into 20 paisa, which equals to 300. Total comes to 600. Here it is 750, here it is 600. How much is the cost reduced? 150. That is the answer for the question number 1. Next, question number 2. A company manufactures a special product which requires a component alpha. The following particulars are collected for the year 2022-23. Annual demand of alpha. See, actually requirement is component alpha. Alpha is the raw material. The demand for the alpha, I am telling you again, they use the word demand, nothing but requirement. Requirement of raw material. How many cases required? Sorry, how many units required? 8,000. We can take it as A. Why? Because annual demand. I am taking it as A. Cost of placing an order, O, 200 rupees. Cost per unit of alpha 400, carrying cost per annum is 20%, which helps to calculate C, that is 400 into 20%, which comes to 80 rupees. So they given A, O, C. The company has been offered a quantity discount of 4% on the purchase of alpha, provided the order size is 4,000 components at a time. So this question, one new point what we are going to study is discount policy. We are going to consider one more point called the discount policy. What is the discount offered means? 4% when the lot size is 4,000. Generally, we will be calling it as the quantity discount. Actually speaking, to apply the EOQ, there should not be any discounts, but it is not the EOQ. Okay, now required. Compute the EOQ. While calculating EOQ, don't consider the discount. Consider the formula root of 2AO divided by C. Calculate the EOQ. State whether quantity discount offer can be accepted. Now, to answer this, we already calculated EOQ. We all know that EOQ is the quantity which can make the total cost least when if there is no discounts. EOQ will be calculated based on the assumption that no discounts. But in this question, they given the discount. Now, how to answer this? Simple. We will calculate EOQ. Using EOQ, we will calculate the total cost. By taking the price discounts, again we'll calculate the total cost. By taking the price discounts, again we'll calculate the total cost. But to get the discount, how much quantity to be ordered? 4,000 units. To get the discount, we need to order the 4,000 units, which is called as ROQ. Calculate the total cost at EOQ. Calculate the total cost at ROQ. If ROQ total cost is less compared to EOQ, that means compared to EOQ, reorder quantity is best. We'll go for the discount policy. Are you understanding? EOQ is the least cost if there is no discounts. If there is a discount, there is certain quantity which can make cost less than EOQ because of discount benefit. So what we need to do, calculate total cost at EOQ and calculate total cost at ROQ of 4,000 units. If ROQ of 4,000 units is less because of discount, then we will go for the discount policy. Otherwise, we will continue with the EOQ. Are you understanding? So first we will calculate the EOQ, that is 200 units. The EOQ is 200 units. Now Evaluation of the discount policy at EOQ, they calculate the purchase cost. Totally 8,000 units, some printing mistake, 8,000 units into 432 lakhs. Ordering cost, number of orders, A divided by OQ, 8,000 divided by 200 into ordering cost per order 200, 8,000. Carrying cost, half of EOQ, that is half of 200, half of 200 into, okay, I'm sorry, let me write them separately. Half of 200 units into 80, half of 200 into 80, that is 8,000. Total comes to 32 lakh 16,000 at EOQ. Now quantity discount is accepted. When quantity discount is accepted, you have to place the order of 4,000 units. You have to place the order of 4,000 units. So purchase cost is 8,000 into 384. How come it will be 384? There is a discount of 4%. So please understand, discount of 4% on the purchase price. What is the purchase price? 400 rupees. So 400 minus 4%, which comes to 384. 400 minus 4%, which comes to 384. So 8,000 into 384, 30 lakh 72,000. Ordering cost, 8,000 divided by 4,000 units. A divided by OQ. Ordering quantity is 4,000 into O, 200. 400. Carrying cost, half of 4,000 units into half of 4,000 units into carrying cost is 20% of the price. So carrying cost equal to 384 into 20%. That is what they are writing here. 384 into 20%, which comes to 1,53,600. Together comes to 32,26,000. So please understand, at ROQ the cost is 32,26,000. At EOQ cost is 32,16,000. Still, which is better? EOQ is better. We'll continue with the EOQ. Will not go for the discount policy. Even after taking discount, we are having more cost. We are incurring more cost by 10,000 rupees. 32,16,000, 32,26,000. Even after considering the discount, still the cost is more. We will not go for the discount policy. We will continue with the existing policy. Clear? Okay. Now, next. So here they given the answer. Advise. Total cost of inventory is lower if EOQ is adopted. Hence, the company advises not to accept the quantity discount. Clear about this? Next. Very simple question. Look at this. The complete gardener is deciding on the economic order quantity for two brands of lawn fertilizer, that is Supergrow, Nature's Own. The following information is collected. Fertilizer Supergrow, Nature's Own. Annual demand, nothing but A. For Supergrow, it is 2,000 bags. For Nature's Own, it is 1,280 bags. Relevant ordering cost per purchase order. So nothing but O. That is 1,200, 1,400. Annual relevant carrying cost per bag. Nothing but C. 480, 560. Required. Compute EOQ for Supergrow, Nature's Own. A, O, C. All the three factors is known. The formula is root of 2AO divided by C. Using this, we can calculate EOQ of Supergrown, EOQ of Nature's Own. Clear? Next. For the EOQ, what is the sum of total annual relevant ordering cost and total annual relevant carrying cost for Supergrown, Nature's Own? In this case, they are asking to calculate ordering cost and carrying cost. Ordering cost formula A divided by EOQ. A divided by EOQ into O. Carrying cost formula half of EOQ into C. Very simple question. Apply the formula, get the values. For the EOQ, compute number of deliveries per year for Supergrown, Nature's Own. Number of deliveries A divided by EOQ. This is the formula. So using these three formulas, you can calculate, you can answer this question. Very simple question. You can try by yourself. Okay. Next. I can say this question is somewhat important. A company uses three raw materials A, B, and C for a particular product for which the following data apply. Look at the raw material A. Usage per unit of product in kgs. See, per unit, how many kgs will be used means 10 kgs. For the production of 1 unit, 10 kgs of raw material A will be consumed. 4 kgs of raw material B will be consumed. 6 kgs of raw material C will be consumed. Here what we need to understand is finished goods, they are expressing in terms of units. Raw material they're expressing in terms of kgs. Have the clarity on this. Next, reorder quantity A 10,000 kgs, 5,000 kgs, 10,000 kgs. Price per kg, nothing but purchase price 10 rupees, 30 rupees, 15 rupees. Delivery period in weeks. When it comes to delivery period, nothing but lead time, or reorder period. One more name for the reorder period and lead time is delivery time. How much time it takes to deliver the product after placing the order. When it comes to A, minimum delivery time is 1 week, maximum is 3, average 2. When it comes to B, minimum is 3, maximum 5, average 4. When it comes to C, minimum is 2, maximum is 4, average is 3. Reorder level, nothing but ROL. This is ROL, this is ROQ. ROL is given for A, 8,000, B, 4,750, C, question mark. We need to calculate. Minimum level in kgs for A and B is not given, for C given 2,000. So this is the information given in the table. Weekly production varies from 175 to 225 units. What is this? Minimum production. Minimum production is 175 units. Maximum production is 225 units. This replicate finished goods or raw material, means this is about finished goods. Please be careful. 225 units production. This replicate the finished goods. Average is 200 units, which is also the finished goods of the said product. Compute the following quantities. The only confusing point in this question is, many people what they think, this is the minimum consumption, this is the maximum consumption, this is the average consumption. But please understand, that is not the consumption, that is the production. Nothing but finished goods. Convert the finished goods in terms of raw material. How to do that? Let me take A, raw material A. How many kgs consumed per unit? 10 kgs. How many kgs consumed per unit? 10 kgs. So, there is some technical issue. Please adjust. Okay. There is some issue with the graphical card. Okay. Now. Now. So, okay, fine. Let me manage with the half screen. Now see here. So, 175 units, 225 units, and 200 units is the finished goods. We need to convert into raw material. How to do that? 175 units into 10 kgs, 1750 is the minimum consumption. Maximum consumption is 2250 kgs. Average consumption is 2000 kgs. This is how we need to convert the finished goods into raw material, and then we need to calculate the requirements. Look at the first requirement, minimum stock of A. First of all, what is the minimum stock, minimum level formula? Reorder level minus average consumption into average lead time. Reorder level minus average consumption into average lead time. Reorder level given in the question 8,000 minus average consumption of A. Just now we discussed 2,000 into average lead time of A 2. So which equals to 4,000 kgs is the minimum stock of A. Same way, we need to calculate maximum stock of B. What is the formula for maximum stock? Reorder level plus reorder quantity minus minimum consumption into minimum lead time. Minimum consumption into minimum lead time. Reorder level given in the question. How much is that? 4,750. Reorder quantity 5,000. So 4,750, 5,000. Next, minimum consumption. How to calculate minimum consumption? 175 into 4 kgs. We'll get the minimum consumption into minimum lead time is 3. So 175 into 4 into 3, net amount is 7,650. So as I told you, the only important point is converting that finished goods into raw material. Remaining everything using formulas we can calculate comfortably. All of you clear on this point? Okay, next. Reorder level of C. How to calculate reorder level? Maximum consumption into maximum lead time. What is the maximum consumption? 225 units into 6 into maximum lead time is 4. Look at here. 225 into 6, 4. 5400 kgs. Next, average stock level of A. Reorder level of C, they calculated using one more formula. Very simple. Minimum level equal to ROL minus average consumption into average lead time. Now what they are doing? They are taking reorder level on LHS. Now minimum level plus average consumption into average lead time. The quantity changes. As I told you, it is not the derived formulas to get the same answers. All are logical. All are general understanding. So here it is 5600. Either normally, always preferable thing is this. Sometimes if the information does not support, we can go by the alternative method. This is the alternative method. So they are presenting alternative solution also. Okay, next. Average stock level, minimum stock level plus half ROQ of A. They are asking for A. Minimum stock level, we calculate in requirement 1. 4000 kgs. I am taking the same here. 4000 kgs. Half of reorder quantity, that is half of 10,000, 9000 kgs. Minimum level plus maximum level divided by 2, that is 10,125. Answers are different. I already mentioned this point. Answers will be different. Okay, now. So this is the answer for the question number 4. Okay, let us start with the question number 5. Look at the question number 5. This question is not about EOQ. This question is about optimum level to place the order. So here what is happening? First of all, look at the question. EXE Limited has received an offer for quantity discounts on its order of material as under. When the quantity is less than 500 or less than 500 tons, it will be 1200. 500 and less than 1000, 1180. 1000 and less than 2000, 1160. 2000 and less than 3000, 1140. 3000 and above 1120. There is some price discount. They are asking. Calculate optimum level of placing a order. Optimum level of placing a order. Now the point is, try to adjust for today. Tomorrow I will make to come out of this technical issue. Okay, now try to adjust for today. No, sir. So here we need to fix which stock level, at which stock level we need to place the order. First of all, we cannot consider the EOQ because there is the price discounts. So we cannot apply the concept of EOQ. Then how to answer this means at all the stock levels. We need to calculate the total cost. At all the stock levels, we need to calculate the total cost. At whichever the stock level, total cost is less, such level will be considered as the optimum stock level. So now the point is how to calculate total cost. We already discussed. Total cost equal to purchase cost plus ordering cost plus carrying cost. Are you understanding? Now, in this question, there is some mistake in the question. Or typo error, I'm not able to understand. Okay. The annual requirement is 5000 tons. A equal to 5000 tons. Okay, now fine. Now first of all, tell me how to calculate purchase cost. Quantity into price. What is the annual quantity? 5000. If it is first level, it is 1200 is the price. Second level 1180. Third level 1160. Fourth level 1140. Fifth level 1120. So that is how we are going to calculate the purchase cost. Next, ordering cost. How to calculate ordering cost? Number of orders into ordering cost per order. I think some information is missing in this question. I am taking the support of the solution. You can cross check with the institute study material. So let me explain. See, I tell you one more thing. In this question, as I told you, we need to calculate the total cost. Very important thing is deciding the format. Many people try to by heart the format. Don't by heart the format. Understand with the logic. At all the levels, we need to calculate the total cost. To calculate total cost, purchase cost plus ordering cost plus carrying cost. When it comes to purchase cost, quantity into price. So we need to open one column for the quantity and one more column for the price. So quantity into price, we'll get the purchase cost. We're done with the three columns. When it comes to ordering cost, it is number of orders into ordering cost per order. Ordering cost per order, which is nothing but O. Ordering cost per order is not going to change. So O will be constant. So we need to calculate number of orders. How to calculate number of orders? A divided by OQ. A divided by OQ. Here the point is less than 5. See, and one more thing. Let me decide the ordering quantity. If you take the first range, I'll come back to the first range later. Look at the next four levels given, or four different levels given: 500 to 1000, 1000 to 2000, 2000 to 3000, 3000 and above. So what the institute has done for this question is they've taken the lower range. They've taken the lower range as the ordering quantity. Sir, I'll take the upper range. You can take the upper range also, nothing wrong in that. But let us go with the institute study material. So they've taken the lower range. So they've taken 500 in the second, 1000, 2000, 3000 as the ordering quantity. When it comes to first range, there is the range given is less than 500. How much is less than 500 means we can take 200, 300, 400. Here they taken 400. It's an assumption. You can try with the 300 also. Nothing wrong in that. Nothing wrong. Okay, they taken 400. Look at here. They taken 400, 500, 1000, 2000, 3000, and accordingly they calculated number of orders. Here they calculated cost of inventory. Cost of inventory A into per ton cost. Nothing but quantity into price. What they mean to say? Quantity into price. They calculated 60 lakhs, 59 lakhs, 58 lakhs, 57 lakhs, 56 lakhs. Ordering cost A divided by OQ. A divided by OQ. Here they take it as Q, take it as OQ. A divided by OQ into ordering cost per order 1200. They are getting ordering cost. Carrying cost, look at here. That's what I told you, carrying cost. How to calculate carrying cost? Average stock. Average stock into carrying cost per unit per annum. Average stock. How to calculate average stock? Half of OQ. Half of OQ. We need to have one more column for that. And carrying cost per unit per annum, we need to have one more column. By multiplying these two, we'll get the carrying cost. Three columns has to be opened to calculate the carrying cost. So for purchase cost, two columns, quantity into price. In product of those two is purchase cost. Three columns for the purchase cost. Ordering cost only two columns. Number of orders, directly will calculate the ordering cost because there is no change in the ordering cost per order. When it comes to carrying cost, three columns. So 3 plus 2 plus 3, totally 8 columns. And one more column for the total cost. Totally 9 columns we need to open. Okay, now see here. When it comes to carrying cost, they calculate in one column, but recommended to open 3 columns. There will be clear-cut information. Okay. Now finally calculate the total cost. At what level total cost is less? See here. Here it is less. So 1000 is the level at 1000. So this level is the best level to place the order. Look at here. Since number of orders cannot be decimals, thus 12.5 orders are taken as 13 orders. So this will happen in the first level. Here when we calculate number of orders, that is 5000 divided by 400, which comes to 12.5. 5000 divided by 400, which comes to 12.5. They given the assumption that, look at here, they written here. They taken the 12.5 as the 13. Even if you take 12.5 for just for calculation purpose, nothing wrong with that. But instead what they done, instead of taking 12.5%, they taken it as 13 orders. 2.5 are taken as 3 orders and 1.66 orders are taken as 2 orders. The decimals has been rounded off. Okay, next. The above table shows the total cost of 5,000 units including ordering and carrying cost is minimum 59,22,000 when the order size is 1000 units. Hence the most economic purchase level is 1000 units. 1000 to 2000 is the most economical level. Okay, now. And the question is continued. They are asking to calculate EOQ. EOQ is 200 units. This is the answer for this question. Some printing mistake is there in the question. So you can go to the study material. Ultimately, what I mean to explain in this question is, first thing, taking the lower levels. That is the first important point which we need to remember is, first point is we cannot apply the EOQ straight away because of the price discounts. Second point is when we are taking the levels, take the lower levels. Third point is in the first level, there is no lower level. As the assumption we taken as the 400. And one more point is when the number of orders in decimals, they had been rounded off. And the format is no need to by heart. When you are see, total cost means purchase cost plus ordering cost plus carrying cost. To calculate purchase quantity into price, we'll get the purchase cost. Number of orders into ordering cost per order, we'll get the ordering cost. Next, average stock one column, carrying cost per unit per annum one column, and multiple of that is carrying cost. To make total of these three, total cost, totally 9 columns. Remember the format. Remember the format with the logic so that you feel comfortable in the examination. Okay, next. Question number 6. From the details given below, calculate reordering level, maximum level, minimum level, danger level. Reordering quantity is to be calculated on the basis of following information. Cost of placing the purchase order 4,000, nothing but O. Number of units to be purchased during the year 5 lakh, nothing but A. Purchase price per unit inclusive of transportation cost. In this question, many people confuse with this transportation cost. So they consider it as the carrying cost. Please understand purchase price per unit inclusive of transportation cost. What does it mean? The supplier might bear the transportation cost. When he is collecting the money, he is collecting along with the transportation cost. I already told you what is purchase cost means the amount paid to the supplier. It can be for any purpose. It can be for any purpose. We are going to take it as the purchase price only or purchase cost only. So this 50 rupees is the purchase cost. Annual cost of storage per unit is 10 rupees. Look at the wording. Annual cost per unit. Nothing but 10 rupees per annum per unit or per unit per annum. Per unit per annum. So this is the carrying cost. C. A, O, C is given and purchase price given. Now look at this. Details of lead time. Average lead time is 10 days. Maximum lead time is 15 days. Minimum lead time is 5 days. Emergency lead time is 4 days. Rate of consumption average 1500 units per day, 2000 units per day. Here what is missing means minimum consumption. So what we can do, average consumption equal to maximum consumption plus minimum consumption divided by 2. Now we need to calculate minimum consumption. So minimum consumption equal to, can we write 2 into average consumption minus maximum consumption? So 2 into average consumption is 1500 into 2, that is 3000, minus maximum consumption is 2000, which equals to 1000 units per day is the minimum consumption. So minimum consumption is 1000 units. All the information is given. We can calculate one by one. What is the first requirement? Reorder level. What is the formula for ROL? Maximum consumption into maximum lead time. What is the maximum consumption? 2000 units. What is the maximum lead time? 15 days. 2000 into 15 days. Look at here. 2000 into 15 days, 30,000. Clear? Next. Maximum level. Reorder level plus reorder quantity minus minimum consumption into minimum lead time. Here what is missing? See, reorder level just now we calculated, that is known. Reorder quantity is not given in the question. We need to calculate. So when it comes to reorder quantity, in the absence of information, we are going to calculate using EOQ. So that is the only option. So EOQ equal to root of 2AO divided by C. AOC is given. Using that we are going to calculate the EOQ. Look at here. First they calculated here EOQ. Working note. Here it is. Reorder quantity EOQ 20,000 units. So by taking the same thing, they calculate the maximum level. Reorder level 30,000 units. Here we calculated reorder quantity 20,000. Minimum consumption, minimum lead time. So net amount is 45,000 units. Remaining to minimum level. How to calculate minimum level? Reorder level minus average consumption into average lead time. So reorder level is 30,000. Reorder level is 30,000. Average consumption, average lead time 15,000 units. Danger level, average consumption into emergency lead time or lead time for emergency purchases. Average consumption is 1500 units per day. Emergency lead time given in the question 4 days. Look at here. Emergency lead time given in the question 4 days, which is less than minimum lead time. So 4 days. So 6,000 units. Very simple question. Okay, next. Question number 7. Look at this question. G Limited produces a product which has a monthly demand of 4,000 units. Look at the wording. Look at the wording. G Limited produces a product which has a monthly demand of 4,000 units. The product requires a component X, which is purchased at rupees 20. For every finished product, 1 unit of component is required. The ordering cost is 120 per order and holding cost is 10 rupees per annum. 120 is O, holding cost 10% per annum. The 10% should be applied on 20 rupees. 20 rupees into 10%, which equals to 2. This is the carrying cost. OC. Now the point is about A. Look at here. Company produces a product which has the demand of 4,000 units. 4,000 units per month. They given monthly information converted into per annum. So 4,000 units into 12 months, which equals to 48,000 units. Here, please understand this 48,000 units is the product which has the monthly demand. That means finished goods. That means finished goods. Here, what they mentioned, the product requires component X, which is purchased at 20 rupees. For every finished product, 1 unit of component is required. Luckily, they given 1 unit. So 48,000 units into 1 component, which equals to 48,000 components is the annual requirement. Luckily, they given for every 1 finished good, 1 component required. So that even if you take directly 48,000, your answer will be correct. Tomorrow in the examination, they may state here 2 units. Then 48,000 into 2 has to be taken. So please be clear. They'll try to confuse you by giving annual information as a monthly information and by giving finished goods in place of raw material. Please be careful. EOQ is about raw material. Fix it in the mind. So in this question, A is 48,000, O is 120, C is 2. Accordingly, we'll calculate the EOQ. Look at here. EOQ. So 48,000 units. Annual requirement or component X. Same, both are same, so that directly they take 48,000 units. C 20, ordering cost 120. Purchase cost per unit, but holding cost is 10%. So accordingly they calculate EOQ 2,400 units. Next, if minimum lot size to be supplied is 4,000. See here what we calculate is 2,400 is the EOQ. 2,400 is the EOQ. But what they stated here is the minimum lot size that can be supplied by the supplier is only 4,000. We recommended the management to purchase 2,400. We recommended the management to purchase 2,400 units, but minimum lot size available is 4,000 units. What is the extra cost incurred? Definitely the management has to incur the extra cost. The best quantity to place order is 2,400. Less than 2,400, greater than 2,400, both will result into extra cost. Even if you order less than 2,400 or more than 2,400, both will result in extra cost. The best quantity is EOQ. Here they are planning to order 4,000 units. They are asking extra cost. Now how to answer this? Calculate total cost at EOQ. Calculate total cost at EOQ and calculate total cost at 4,000 units. Compare both. We'll get the extra cost. Okay, now what is the minimum carrying cost the company has to incur? Carrying cost depends upon ordering quantity. Carrying cost equal to half of OQ into C. So whichever the quantity, see when the ordering quantity decreases, carrying cost decreases. In this question, there are two ordering quantities, 2,400 and 4,000. Out of these two, 2,400 is less. 2,400 is less. So calculate the minimum carrying cost by using 2,400 units. This is the answer for the question number 7. So by this, we're done with the stock levels. Okay. Now let us start with the next concept called as the valuation of material. So we have completed with the stock levels. Under inventory control, yet to discuss stock classification, stock ratios, and lastly stock registers. These 3 topics I'll discuss after doing the valuation of material. What is this valuation of material means? We need to understand what are costs that need to be considered while taking the material cost. I already told you the cost associated with the material cost is 4 elements: purchase cost, ordering cost, carrying cost, stock out cost. So here we are going to see the classification of the all these cost elements. If you look at the chart, what I am presenting here, if you look at this table, from this table we can understand what is to be included in the material cost. Look at this. First, purchase price. I already told you purchase price or purchase cost is nothing but amount paid to the supplier. Whatever the amount paid to the supplier, we are going to call it as the purchase price. What all the items to be added means insurance charges, commission, freight inward, cost of containers, wastage due to normal reasons, duties and taxes for which no credit is available. No credit in the sense input tax credit. When we pay the tax, no input tax rate is allowed means we are going to consider it as a cost. If the input tax rate is available, we are not going to consider it as a cost because we are paying and getting the benefit through ITC. So these all are the cost elements that need to be added. And what are the items to be reduced means discounts, discount, rebate, subsidy, duties and taxes for which credit is allowed, credit is available. Okay, next, penalties and charges exclusion. See, penalties will not form part of the cost. Penalties will be levied for due to violation of law. That penalty is paid by the management, that has to bear by the management, will transfer it to the P&L account. It will not form part of the cost of material. Okay, now any other expenses not borne. These things has to be excluded. In detail, let us discuss this. Look at here. When it comes to discount and subsidies, there are 3 types of discounts, that is trade discount, quantity discount, cash discount. Trade discount will be given at the time of making sales to promote the sales. Quantity discount will be given based on the quantity, based on the high quantity purchased by the customers. Cash discount will be given for getting prompt payment from the debtors, for getting within less duration from the, for getting payment within less duration from the debtors. Here, when it comes to 3 discount, trade discount will be reduced, quantity discount will be reduced, whereas cash discount will not be reduced because cash discount is not operational nature, it is a financing nature. It will not form part of the cost of material. So, we are going to deduct the trade discount, we will deduct the quantity discount, whereas cash discount will not be allowed as a deduction. Cash discount will not be allowed as a deduction. All of you clear on this point? Subsidy received from the government, that will be allowed as a deduction. When the company will get the subsidy, when the company starts the business in the special economic zones, the government will provide certain subsidies. That subsidies will be reduced from the cost. The only item which will not be reduced is cash discount because it is not operational nature, it is financing nature. It is a financial cost. That will not be allowed as a deduction. Clear on this? Next. Duties and taxes. First one, road tax or toll tax. When we are getting goods from the supplier place to the factory, we have to, when we are coming through the roadways, we are going to pay the toll charges. Are we going to get input of that? No. So that will form part of the cost. That will be added to the material cost. That will be included in the material cost. Next, IGST, CGST, SGST. We all know about this. If the ITC is available, we paid the GST, but we taken as the ITC. It is not our cost. It will not be included. If ITC is not available, then it will be included. Look at here, it is excluded. It will not be included in the sense it is excluded because input tax credit is available. If the ITC is available, exclude. If ITC is not available, include in the cost. Clear? Next, basic customs duty. ITC is not available. When we will pay the basic customs duty? When we import the goods from the foreign countries, we are going to pay the customs duty. That customs duty, ITC is not available, so it will be included in the cost. See, paying the money, getting back the benefit means it is not a cost. Paying the money we are not getting back means it is a cost. Customs duty paid to the customs authorities and we are not going to get the ITC. So it will be included in the material cost. All of you clear about this? Next, some general expenses, insurance. Okay. Before that, penalty and charges. I already told you, any sort of penalty paid that will be transferred to the P&L account. It will not form part of the cost. Penalty will be levied due to violation of law. That is the mistake of the management. That should not be charged to the customer by treating it as a cost. We are going to transfer it to the P&L account. Demurrage charges, detention charges, penalty, all these things not included, not included, not included. All these things will be transferred to the P&L account. It will not form part of the material cost. Next, other expenses, insurance charges. Insurance made during the transportation. Insurance made during the transportation, it will be added. Commission brokerage paid to the agents. Sometimes when the company want to purchase the goods, they will be purchasing through agents. They are not able to find the supplier directly. They'll go through the agents. So when they go through the agent, for agent they need to pay certain commission that will form part of the cost. That will form part of the purchase cost. It will be added. Freight inward, it will be added. We all know about this. When it comes to the cost of containers, this is very important. Let us understand this. Cost of containers are of two types: returnable. Okay, here only it is non-returnable, returnable, non-returnable, returnable. See, what is this non-returnable? Returnable means some of the, first of all, container. What is container? The boxes which is used to move the raw material. There will be wooden boxes, iron boxes, cardboard boxes. There are different types of containers. Non-returnable container. Let us discuss about the non-returnable containers. I am purchasing the raw material. I am in Bangalore. I am purchasing the raw material in Mumbai. From Mumbai, we are getting goods to the Bangalore. When we are getting the goods, we are asking the supplier to supply in the cardboard boxes. He supplied in the cardboard boxes. For that cardboard boxes, he is charging me extra 5,000 rupees, which is called as cost of container. So in our example, cost of container is 5,000. After receiving the raw material, am I going to return back the cardboard boxes? No, he will not take back that. This is called the non-returnable containers. That 5,000 rupees, I'm not going to get the refund. So I'm going to treat it as a cost. In case of non-returnable containers, the cost will be added to the material cost. In case of returnable containers, let me take an example. He is supplying me in the air conditioner boxes. He is supplying the raw material in the air conditioner box, like fridge, air conditioner boxes. Now, I am paying him, let me take an example, 1 lakh rupees. 1 lakh rupees for the containers. Now, I am going to return back this. I am going to return back this to the supplier. Supplier is going to give me refund. Refund of 1 lakh rupees. I have paid 1 lakh and I am getting the refund of 1 lakh. Is there any cost in that? Zero. Paid and get the refund. There is no cost involved there. Paid 1 lakh rupees due to certain damages. Due to certain damages made to the container, he has refunded only 90,000. How much is the cost? 10,000. Paid 1 lakh rupees, getting refund of 90,000. The difference is 10,000 rupees. The 10,000 rupees will be treated as the cost. If it is non-returnable, full amount is added. If it is returnable, full amount is refunded means not added. If there is any less amount refunded, that difference amount will be considered as the cost. That is about the cost of containers. At last, shortage, nothing but loss. Shortage, nothing but loss. There are two types of losses. We all know about this: normal loss and abnormal loss. Normal loss and abnormal loss. What is normal loss? Nothing but expected loss. What is abnormal loss? Unexpected loss. Expected loss is normal loss. Unexpected loss is abnormal loss. Normal loss will happen due to inherent nature of the product. If you take petrol, evaporation is the inherent nature. If you take cotton, getting dry is the inherent nature. Are you understanding? Losses of two types: normal loss and abnormal loss. What is normal loss means expected loss. What is abnormal loss means unexpected loss. Please understand. Normal loss is unavoidable. Normal loss is unavoidable. Abnormal loss is avoidable. So this is about normal loss and abnormal loss. Let us see the accounting treatment. When it comes to normal loss cost, we are going to charge it to the customer. It happened due to inherent nature of the product. Customer has to bear that. In such case, cost per unit equal to total cost minus normal loss scrap income divided by total units minus normal loss units. Using this formula, we are going to add it to the good units. Normal loss cost will be added to the good units and we are going to collect it from the customer. When it comes to abnormal loss, it happened due to certain mistakes that will be transferred to the P&L account. So this is about normal loss and abnormal loss. Whenever there is a normal loss, this is the formula to calculate the cost per unit. Total cost minus normal loss scrap income divided by total units minus normal loss units. Abnormal loss will be straight away transferred to the P&L account. Okay, so that is what about the normal loss and abnormal loss. Based on this, we have two questions. Let us solve the two questions. Okay, now question number 1. An invoice in respect of consignment of chemical A and B provides the following information. Chemical A, totally we are getting 10,000 kgs at the rate of 10, 1 lakh. Chemical B, 8,000 kgs at the rate of 13, 1 lakh 4,000. The customs duty, basic customs duty, what we paid is 10%. Credit is not allowed. I already told this. Basic customs duty, we are not going to get the ITC. So it will be added to the cost. It will be treated as a material cost. Okay, now see here, 20,400. Railway freight 3,840. Total cost comes to 2,28,240. Now they given certain information here. A shortage of 500 kgs in chemical A, 320 kgs in chemical B. So this is the shortage is noticed due to normal breakages. So this is the normal loss. You are required to compute rate per kg. They are asked to calculate cost per unit or rate per kg of each chemical, assuming provision of 2% for further deterioration. 2% has been decided for the further deterioration. So first of all, provision. When we create provision, when we expect some loss. So this 2% is also normal loss. The 2% deterioration is also normal loss. After based on expectation only we are creating the provision. There are two normal losses. One is breakages, one more thing is deterioration. Now we need to calculate rate per kg. How to calculate rate per kg? Total cost minus normal loss scrap income divided by total units minus normal loss units. In this question, normal loss scrap income is not given. So first we need to know total cost of chemical A, total cost of chemical B. How to do that? Chemical A, 1 lakh is the purchase price. To that we need to add basic custom duty 10% and we need to add the railway freight. See, there is no confusion with the purchase price and custom duty, but railway freight they given 3,840 rupees. That 3,840 rupees is for both chemical A and chemical B. On what basis? On what basis we are going to apportion? That means we are going to apportion on the basis of number of kgs that we order or number of kgs that we are getting through the transportation. How many kgs of chemical A we are getting? 10,000 kgs. How many kgs of chemical B we are getting? 8,000 kgs. The proportion is 5:4. In the proportion of 5:4, we are going to apportion this cost. So that we'll get the total cost. Add purchase price, basic custom duty, railway freight. Look at here. Quantity purchase. Okay, I will come back to this. Let us look at the cost first. 1 lakh, 1 lakh 4,000. 10%, 10,000, 10,400. When it comes to railway freight, 5:4, 2,133, 1,707. Total cost comes to 1,12,133, 1,60,107. So by this we done with the cost portion. Let us look at the units. When it comes to units, total kgs is 10,000 kgs. Total kgs. Just a second. Let me change the color. Total kgs is 10,000 kgs. Here it is 800 kgs. From 10, let me discuss about the chemical A. Let me discuss about the chemical A. The same is applicable to chemical B. Chemical A, totally we are getting 10,000 kgs. In that loss identified is 500 kgs. 500 kgs in chemical A. So 10,000 minus 500, 9,500 units has been received. 10,000 ordered, we are getting through transportation. Normal breakages identified is 500. 10,000 minus 500, 9,500. On that 9,500, still, further we are going to create the provision of 2%, which comes to, see here, 10,000 minus 500, 9,500, 2%, 190. The net quantity is 9,310. Same way we calculate chemical B. Apply this here and get the cost per kg 12.04, 15.43. All of you clear on this? Understanding? Okay. Look at the question number 2. Look at the question number 2. At what price per unit would part number A32 be entered in the store's ledger if the following invoice was received from the supplier? So they're asking to, again they're asking to calculate price per unit. They're asking to calculate price per unit of part number A32. Look at here. Totally we are getting 200 units at the rate of 5,000. 20% discount we are getting 200. It is allowable. Totally 800. GST what they paid is 96. Packing charges 5 non-returnable boxes. If it is non-returnable, it is our cost. If it is non-returnable, it is our cost. Next, A2% cash discount will be given if payment is made in 30 days. Look at here. A 2% cash discount will be given. A 2% cash discount will be given if the payment is made in 30 days. First of all, cash discount, are we going to allow as a deduction? Cash discount, are we going to allow as a deduction? No, only trade discount and quantity discount will be allowed. Cash discount will not be allowed, so no need to consider this adjustment. See, totally we need to pay 946 rupees. Now what they're mentioning, if you pay within 30 days, they'll give the cash discount. No need to consider that cash discount. No need to consider that cash discount because cash discount will not be allowed. Number one. Number two, documents substantiating payment of GST are enclosed for claiming input tax credit. So GST is a allowable expenditure, so it is not our cost. They are telling that the documents is substantiating to claim the input tax credit. So the company can claim the ITC. If the company can claim the ITC, no need to consider this 96. So what is the cost means 800 rupees what we paid to the supplier and 50 rupees what we paid for the containers. These are the two cost elements which we need to consider for the material cost. So 800 plus 50, 850 divided by 200, 4.25. I hope you understand. Very simple question. No need to consider the cash discount. Don't consider the GST because of ITC. These two things we need to understand in this question. Clear now. Let us start with the next concept called as the stock ratios. When it comes to stock ratios, first thing what we need to understand is inventory turnover ratio. Inventory turnover ratio. How to calculate this means annual consumption divided by average stock. Annual consumption divided by average stock. This is the formula. How to calculate consumption? We all know that consumption equal to opening stock plus purchases minus closing stock will get consumption. How to calculate average stock? Opening stock plus closing stock divided by 2. These are the formulas. Let us understand how this inventory turnover ratio helps to make any of the decisions. Let me take an example. There is a component A and component B. We have calculated inventory turnover ratio. A is getting 12 times, B is getting 4 times. Okay, A is getting 12 times and B is getting 4 times. Using this formula, we calculate the inventory turnover ratio. What is the meaning of this 12 times? 12 times chemical A get replaced or rotation happen for 12 times. See, first of all, inventory turnover ratio. What do you mean by inventory turnover ratio? If it is raw material, we'll purchase the raw material, consume the raw material. Purchase the raw material, consume the raw material. Purchase the raw material, consume the raw material. If it is finished good, purchase sales, purchase sales, purchase sales. Now, when it comes to chemical A, how many times it happened like that? 12 times. When it comes to chemical B, it happened only for 4 times. Whether it can be raw material or it can be finished good. What is the fast moving? What is the fast moving means chemical A is fast moving, whereas chemical B is slow moving. Using the inventory turnover ratio, we can decide which is the fast moving stock and which is the slow moving stock. Based on this, we can place the orders. If it is fast moving goods, we will order for more number of times and more quantity. If it is fast moving, we'll order more number of units as well as more number of times. If it is slow moving, we'll order less quantity and for less number of orders. That kind of decisions can be made based on the inventory turnover ratios. I hope you got the point. Inventory turnover ratios will help to decide which is fast moving and which is slow moving, which is having more number of rotations or more number of turnover ratios. It is called as fast moving, and which is having the less number of turnover ratio is called as the slow moving. I hope you all got the clarity on this. Let us do 2 questions based on this. I think question number 10. Yeah. Look at the question number 10. The following data are available in respect of material X for the year ended 31st March 2023. They had given opening stock, purchases, closing stock, calculate inventory turnover ratio, number of days for which average inventory is held. Let us understand this first. They had given opening stock, purchases, closing stock. Using this, we need to calculate consumption. Consumption equal to opening stock 90,000 plus purchases 270,000 minus closing stock 110. So if you take net of this 250,000 is the consumption. Average stock equal to 90,000 plus 110,000 divided by 2, which comes to 1 lakh. So inventory turnover ratio equal to 2,50,000 divided by 1 lakh, which comes to 2.5 times. 2.5 times. That is what they are writing here. Okay, that is what the first requirement. Next requirement is number of days for which average inventory is held. They are asking number of days. In a year, see, in a year, how many times it get replaced? 2.5 times. In a year, how many days? 365 days. So 365 days divided by inventory turnover ratio, that is 2.5 times, we will be getting 146 days. 146 days. How to calculate number of days? Or inventory holding period. Inventory holding period. How to calculate? That means if they're asking in days, 365 days divided by ITR, inventory turnover ratio. If they're asking in months, then 12 months divided by ITR. All of you clear about the very simple question. Next, question number 11. From the following data for the year ended 31st March 2023, calculate inventory turnover ratio of 2 items and put forward your comment on them. First, we'll calculate the inventory turnover ratio, and comment is which is fast moving and which is slow moving. That is what the comment. Look at this. A, opening stock given, purchase given, closing stock. Using this, we can calculate the consumption. Using these two, we can calculate the average stock. Using consumption and average stock, we can calculate the ITR. Let us do that first. Opening stock plus purchases minus closing stock will get consumption. Average inventory is 8,000, 10,000. Average inventory turnover ratio 7 times, 2.5 times. Now tell me which is fast moving. Which is fast moving? A is fast moving and B is slow moving. They calculated days also. Within 52 days, we can sell the material, or we can consume the material A. 146 days it will take to consume material B, which is fast moving material A and slow moving material B. Look at here comment. Material A is moving faster than the material B. This is the concept related to the inventory turnover ratio. Apart from this, we are yet to discuss. Number one, there are only two concepts: classification, stock classification, and one more thing, stock registers. When it comes to stock registers in our syllabus, it is not straightforward questions, it is application oriented. We'll look into that in the next class. As on today, I'm winding up the class. Thank you so much. As I told you, please subscribe my channel for more updates. And one more thing, whatever the discussion that I made, immediately you practice. It will not take much time for you. The main purpose what I'm doing this to reduce the preparation time. When you see this video, once I explain all the adjustment, you feel comfortable to do that questions. So just I'm trying to reduce the preparation time. That is my agenda, and giving the clarity on the concept. And whatever the doubts that you have, please mention on the comment section. So that I can revert back on that. Thank you so much. Today I'm winding up the class. Jai Hind.